Silver. Silver has made a mistake. Investors in silver have made a mistake. This happens in markets, and so people are looking for a headline like, well, why is silver going? Why is gold going up? Why was this stock, et cetera, et cetera. And usually it's stuff that's embedded, already built into that market that it needs to do. Okay, anyway, that's a broad comment, but I think it applies.
All right, listen closely. If you own gold or silver, or you're thinking about buying, you need to hear what Michael Oliver just said. In his latest interview, he breaks down what's really happening right now in the precious metals market. And what's about to come next might completely surprise you. Is it time to buy more, or should you hold what you have? Michael explains it all with real data, real signals, and no hype. Just straight talk that every investor needs to understand. His latest analysis reveals what's really coming next for gold and silver prices. And trust me, you don't want to miss it. So stay tuned till the very end, because what Michael shares could completely change the way you look at your gold and silver holdings.
It's an ongoing bull trend that's, everybody tries to find in any market trend a reason for it. And usually the reasons for a bull trend or a collapsing market, either way, is one, they got too extreme for too long, either too high or too low. Case of silver, we argue, too low for too long, especially on a relative basis to gold. And then when they turn up, they don't need a reason. The reason already occurred and was ignored. And so people are looking for a headline like, well, why is silver going? Why is gold going up? Why was this stock, et cetera, et cetera. And usually it's stuff that's embedded, already built into that market that it needs to do. Okay, anyway, that's a broad comment, but I think it applies. The ongoing thing of gold and monetary metals, and I call them monetary as opposed to like platinum, palladium, which are precious, but there's a difference between precious and monetary. 3,000 years of history of gold and silver being money, okay? If you look at, go to a Federal Reserve St. Louis, their FRED chart, they call them, and go to an M2 chart, money supply, okay? And just look at it. Go back 50, 70 years, however far back they go, a long time. And look at, and move your little arrow along and like go to the first of the decade, January of 1970, and then go to January of 1980 and 90, and write down the number. What was the money supply then? It's parabolic, okay? And meaning the decay in the real value of the stuff in your wallet. We're a miniature, most countries in the West are, miniature versions of Venezuela. Okay, we made fun of that a couple of months ago. We put a Venezuelan stock chart on page 1 and said, boy, we should be long Venezuela, because the chart is parabolic, the stock market. And you say, well, that's great. No, it's not, because the degradation of the money ongoing constitutes the explanation of why the thing's going straight off the page. So is the price of dog food or a roll of paper, was exploding as well. Well, when you go back, that many decades in the U.S., basically the money supply increases about 90%, almost doubles, in other words, every decade. Sometimes more, sometimes less, and especially when the central bank gets nervous about this, that, or the other data point. Usually that's associated with the stock market downturn when the data points really start to go sour. Then they start printing more, okay? Well, gold goes up and holds its value against that ongoing degradation. And silver does too, although it's been lagged, especially over the last couple decades, to what gold has been doing. Gold's way above its 2011 high. Heck, copper is above its 2011 high. And there's a lot of base metals out there that if you circle where you are now and go back to where, 10, 20, 30 years ago, you say, gee, silver. Silver has made a mistake. Investors in silver have made a mistake. This happens in markets. You've got enough experience. If you go back to 2007 and 8, the market collapsed for reasons that, the guys in the story, they knew why it was going to collapse. They knew a couple years ahead of time, and yet the market wouldn't do it. And then finally it did collapse and paid its dues for that which it already had done and failed to compensate for. So I think silver right now is in one of these situations where not only is monetary metal going up, gold especially, the mama market. And silver's coattailing it. Still very undervalued to gold, but it's catching up, and it's erasing years of underpricing relative to a lot of things, to gold, to the degradation in the money unit. For example, if you just arbitrarily go back a quarter of a century, it'd be the October of 2000, okay? And look at the S&P. Right now it's up 3.5-fold from where it was then. It's actually less than the degradation in money almost. Gold's up 11+-fold, okay? So it's held its value against degradation of money. And that's a factor that's ongoing in all markets. And there's times when, let's say, the stock market reaches a bubble point where it's been ridiculous for too long, overpriced versus reality. And there's a lot of fundamentals out there that, that normally look at, the earnings and so forth. And those don't seem to work precisely, but they're a ballpark warning. And yet it's still up there. So markets make mistakes, and when they do, the erasure of that mistake is often horrendous. Like, let's say the dot-com top, NASDAQ 100, for example. When it turned down, S&P went down 2 years to 2002, 50%. NASDAQ 100 went down 82%. You talk about cleansing, okay? And it wasn't that what it was up there for was wrong. In fact, the dot-com bubble was totally valid. It changed our lives more than people even thought, and the internet did. Mm-hmm. And yet it still erased 82% of it, and it took it till 2016 for the NASDAQ to even get back to the price it had been in 2000. So, the point being that a lot of these things that happened, like if the stock market's going to top, as we argue it's topping, or the monetary metals are going to accelerate now, it's because of not factors that are necessarily new headlines, but old stuff that's finally getting recognized. And I think that's where we are, at a very dramatic point, especially for silver.
Okay. We're going to spend a lot of time talking about silver here in just a few minutes. I know you're chomping at the bit here, Mike. But before we do that, I want to kind of dive into a little bit of the story.
Like gold, okay. I think it's telling us that, one, it's anticipating, and gold's not some dumb market that follows headlines. There might be a day here or there where, something happened in Iran. We dropped the bomb and therefore, whatever. These excuses come and go. People like to latch onto them and say, well, that's why it happened. Okay. But it's ongoing, and gold knows that if, one, we have the biggest stock market bubble in U.S. history, which we've been arguing you do have, both in terms of age of the bull market, most of the bull markets in the past that we call bubbles, like the dot-com or 29, they were only 4 or 5 years. And the multiple gain was like 3 or 4-fold at most. And then you still collapse. Well, we've gone up, 20-fold in the NASDAQ since 2009. S&P's gone up maybe 10, 11-fold since 2009 low, which because, 700 level on the S&P. And the duration has been like triple the norm. And you can look at a money supply chart or a Fed funds rate chart, the short end of the market, the debt market, and see why. Because we've been given a Cheech and Chong injection of happy money, free money. In fact, 10 of the last 15 years, the rates were effectively zero. You go back 75 years, and even when they raise rates to 5%, that's low compared to the last 75 years. That's in the lower quadrant of the rate levels. Okay, so the stock market's been fueled by free money. And that's why, the stock market's up today. Why? Great unemployment report. Why is it great? Because it means the Fed's are going to cut and print. They got more excuse to print. And that's all we care about. Give us more injections, boys. And that's in effect, it's a miniature Venezuela market. Print the money, we'll go up, okay? So will the price of... When I was a kid, a loaf of bread was 20 cents, okay? What is it now? When your granddad built a house, it cost, the median price was $4,500. Now it's $450,000, okay? What does that reflect? Degradation in the money unit. period, okay? And when the Fed has more incentives in this ECB and the Bank of Japan have more incentive to print, that money goes somewhere. Now, quite often it'll go to the stock market, but even the stock market historically will get to a point where it says, golly, I've gone too far with this game. And it breaks. And when it starts to break, people with assets who are smart will begin to get out and move somewhere else. It's never the case where everything goes down. That argument is not true. Gold has always risen in bear markets. Back in the 1930 to 32 bear, after the crash, we had a big rally in the stock market back halfway to the high, and then the bearish market started. It went down like 80%. Gold miners, you couldn't buy gold because it was illegal. Okay, government knows best. But homestake mining went up like 1,000%. Okay, during the huge bear market in stocks. Similarly, 2000, 2002, stock market went down big. What did gold do? It was advancing. It kept advancing till 2011. 2007 to 2009, stock market went down big. During that time, except for a month or two in there, an interruption, gold went up big and continued on up big. So the money goes elsewhere. Gold is getting some of that money already, certainly not from U.S. investors, but from foreign investors, governments as well. But when the U.S. stock market shows another fracture, not that headline chasing sell-off that we had in April, tariffs would sell it, okay? The reason for the market to go down is not some new news. It's based on, one, the massive excess of the past 15 years finally has reached a point where even if they keep printing, it won't help. Why? Because in 2000 to 2002, the Fed printed like crazy to save that bear market from happening. It didn't work. They started cutting rates in 2007. In fact, that's what printed the top.
So, as Michael Oliver explained, the signals for gold and silver are becoming clearer every day. This isn't just noise, it's a shift in the making. If you own precious metals or plan to, now's the time to pay attention. If you found this video helpful, make sure to hit the like button, subscribe, and turn on the bell icon, so you never miss an update when experts like Michael share insights that could shape your next big move. And don't forget, share this video with your friends who care about their financial future.